Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. It is August 26th, just before 1 p.m. and the market is doing pretty much what I expected. I'm going to go through that. I'm actually going to go through some stuff that I haven't talked about in past videos. But before I do, please do me one huge favor. If you're watching these videos and you enjoy these videos, please make sure you give me a like and subscribe to the channel. And also please leave a comment, even if it's just to say I watched the video. I always say that stuff at the end of the video. I realize a lot of people don't watch till the end, and the way YouTube's algorithm works, apparently all that stuff is really super important. I'm not a YouTube guy, so I didn't know that. But yeah, it would definitely help me out and keep me doing these videos if you could do that for me. Just, hit that like button, hit the subscribe, and leave me a comment, whatever it is. With all that being said, so I want to talk first about my short that I opened yesterday. I did a video last night. I said that I went short at 10,359. I actually did close that short, and I closed it on a limit order. I actually put in a limit order, decided to get out of it. I'll show you where I got out of it here in just a second, if I can find the chart. I actually got out of it on this tail right here. Okay, when this thing came down, basically did a BART, which was kind of what I was talking about in that last video. I actually had an order sitting in just above the 200 EMA on the 5-minute chart. So I closed it, made just over 1%. Wasn't a great win, but it allowed me to go to sleep and sleep good versus worrying about what was going to happen in the market. I was very concerned that we were going to get some kind of weird manipulative spike. So what I decided to do was close that and then look for a better setup versus just kind of gambling, okay? Because the setup where I went short at 10.5 was actually a day trade setup. It was never intended to be a swing trade, but I was kind of trying to force a square peg into a round hole, so to speak. So I did close that trade. I want to be fully transparent. I have no open trades at the moment. So yeah, made a little over 1%. It was fine, right? It was like a $20,000 trade, so 1% is nothing to cry about. So with all that being said, right before I actually logged off yesterday, I actually realized that that symmetrical triangle we were in, it was a sneaky one. So we had this triangle, we had RSI on our 4-hour here. It was looking something like this, right? Something like, I don't know what the hell it was looking at. Maybe it was like this, right? It's hard to tell now. I can't remember where these lines were at. I think maybe this one was over here. Yeah, so it was something like this. And it broke out of that. Lots of people went long, right? Price shot up $400 or $500. But after it started to come back down, remember in yesterday's video, if you watched it, I drew this up. It went right up into the short zone. A cliche textbook example of going to the 61.8 fib. See it right here? Went up into the short zone, got slammed back down, right? So that right there started to make me think that, that was a fake pump. Just a scammy pump to liquidate shorts. And if you look back over on that triangle, I started to realize, and I drew this up last night, watch this. As soon as price started coming back down, I realized that that probably was not the real triangle. This was probably the real triangle. You seeing this right here? Now watch this. If we go back over to the chart and we pull this line back, this is probably our real triangle right here. Something like that, or something like that. We've got 1 touch, 2 touch, 3 touch, 4 touches. There's the bottom. We've got our upward sloping line on RSI. We can pull this back to here. We have a very beautiful downward sloping trend line, and you can see this actually happened while I was sleeping here between 3 a.m. and 7 a.m. Came up, slammed into the top of the triangle, got rejected on RSI. But if you look at the price, and this is very, very muddy waters, okay? If you look at the price action, it did not get rejected right there. In fact, what it did was it's coming back down and retesting the top of that triangle, if that's the triangle, right? So it's a little weird because this down here is bearish, right? When we look at this being rejected, that's a bearish thing. But if this is indeed the top of the triangle and this is retesting it, that's actually bullish. And that's the main reason that I wanted to get out of my short last night, is because I had a feeling we were going to come down and test the top of this triangle and that we could bounce off of it. Now, it's not guaranteed, but it was a big enough chance that I didn't want to be sitting there with the short and wake up to find out the price had jumped $500 and I lost $1,000. So if we pull this back, we really don't know where the triangle's at. And we're going to have to wait and kind of see what price does here. But I think that's probably a legit triangle, that we're probably sitting on top of it right now. But the argument could be made that we need to go way back here like this, Okay, that way it's closer to this trend line on RSI. Now they pretty much line up there. So if we do something like that, the top of this green one, so it lines up with RSI, and we draw it like that, you can see that it still looks legit. It's just that now we've slipped underneath the top of it, which again is bearish. So I'm not going to open a position based off of this triangle. Okay, I'm going to watch this and see how it acts. It's very possible that we get to, what we get today is we get something coming down to test the 10,000 again, right? Which will put this down here. But here's the thing: if price falls all the way to 10,000, it's going to fall out of the bottom of the RSI. Okay, and typically, if it falls out of the bottom of the RSI, you're going to get a big dump. Just like last night when it came out of the top of the RSI triangle, when we were drawing it, or when I was drawing it, like this. Look what happened when it broke out of it. Price went nuts, right? Well, the same thing typically happens when you break down. So if we do break down, it's very possible that we're going to go down here and make a new low. So I'm going to be watching that. If we can break south of the RSI trend line and we can break south of $10,000, I'm going to be hunting for a short setup. I'm not going to do a lot of day trading on Bitcoin until the manipulation slows down a bit. Now I know what you might be thinking, James, Bitcoin is always manipulated, but you have to understand that right now it's being manipulated much more than usual because volume is so low. Okay, the lower the volume is, the easier it is to manipulate the price. And if you look, the volume is so low you can barely even see the volume bars. Look at this. The volume bars are turned on. It's just it's so low you can barely see them, right? 18 volume, 4 volume, 12, 13, 5, 1 volume, 10, 2. This is on Coinbase, one of the most liquid exchanges there is, right? And there's practically no volume. So somebody can come in there with a few $1,000,000 and move the price, right? And all they have to do is move it enough to start triggering bots, okay? Once they start hitting important price levels, then all those bots that are sitting there waiting on conditional orders to buy, they pump the price, or they sell and they dump the price. So right now this is super dangerous territory. We need to get some volume back so that it's a little more stable. And by the way, this is not what institutional investors want to see. This right here is bad for cryptocurrency. This is bad for Bitcoin. Everybody that's screaming bull, 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 you have to understand that this is bad. We do not want to see 5-minute candles where the price moves 5% in 5 minutes. That is exactly the type of stuff that will make institutions hesitate to get involved in cryptocurrency. But let's just pull up a clean, fresh chart here, and let's talk about the descending triangle. So basically we have a descending triangle. Looks something like that, right? Support's down around $9,000. We've got the sloping line. Okay, great. People are acting like it's just going to bounce off the support and go higher, but remember, that would actually, if it breaks that support, it's going to confirm this double top. We had another descending triangle not that long ago that people didn't believe in, that people said was not a descending triangle. It was right here. Anybody remember that descending triangle? I remember it very vividly because I kept wanting to sell these rallies, but I lacked the confidence to do so, and everybody kept saying that this wasn't a descending triangle. No, that's too big. There's no way that that's a descending triangle because that would have a price target of 0. That's what they kept saying, right? Because if you measure this from the top to the bottom, it was about a $5,800 drop, and this right here, price was around $5,900. So the price target would have been like $100. So people were basically saying, not all people, but a lot of people were basically saying that that wasn't a valid descending triangle. It just happened to be there. Like, what? Like looking back now, it's like, are you crazy? You can't just say, oh, that's not a real pattern. It just happens to be there. If it's there, it's there. It's a real pattern. It doesn't guarantee that the target's going to get hit, but it is absolutely a real pattern. And what happened was we stayed there for basically, 9 months from early February where this triangle first started to form. We stayed there all the way through November. We got a false break, a bull trap right here, came back down, bounced off of it, sucked in the bulls right there, and then, bam, broke south. And when it broke south, it was fast and it was violent. I mean, if you look at the price range here, from the moment it broke south of that triangle, within 14 days, it had dropped 41%. Now, it closed that second week down 34%, right? And really faster than that. These are 2 weekly candles, but if we zoom in on the daily, this was nasty, nasty business. From the time it broke south until our bottom was 30 days, and it dropped 43.94% in 30 days, okay? And it dropped and closed down 16%, in 5 days. It was a really, really nasty business. So I don't know if I've talked about, I don't think I've talked about that triangle in past videos. Maybe I have, but it seems like people are ignoring this current triangle we're in just as much as they were ignoring this old triangle right here. And I'm still getting a lot of flack, especially on Twitter. It's funny how Twitter is. If you're not a bull on Twitter, man, you're just not popular. But people are acting like it's crazy that it's going to come back down out of this triangle. Remember, the triangle has a target in the low 4,000s. Doesn't guarantee it's going to get there. This one had a target that was down around 100 bucks. You know, and only got to 3,000. So sure, it's possible we break south, we find 8,500 support and go north. It's possible we go down to 7,200, 7,300 area, which is the golden ratio, or the 61.8 fib, and go north. It's possible we go down to 5,000, excuse me, 6,000, find support on this long-term line and go north, right? Those are all possibilities. We could also go to 5,000 and go north. Go to 4, you know, we could do anything, right? But these are all valid things. Those are all possibilities that we have to be, you know, prepared for. What most people want is they want to catch the top and they want to catch the bottom. And the reality is you're almost never going to get in on a perfect entry, and you're almost never going to get out on a perfect exit. Okay? You basically, most traders will ladder their buys and ladder their sells. So for example, if a trader thinks that Bitcoin is going to 4,000, he may buy some at 8,000, some at 7, some at 6, some at 5, some at 4, and then cost average that out. Same thing when I was selling on this pump. You know, I didn't sell all of my Bitcoin up around 13 grand. I was selling this whole way up. Now, I actually started selling too early because I followed a rule that I don't really like. I'm not going to talk about the rule, but I'm not going to follow it anymore. I just don't like the rule. I've done a lot of back testing, and I just don't think it's a very valid strategy. But I did sell some Bitcoin at right around 6,100. And that brought my average down. My cost average when I sold all of my Bitcoin, my cost average was around $8,800. Now that's not counting my trades, right? That's just taking profits. So that's terrible. $8,800 is terrible, right? And it was all because of the Bitcoin I sold down around 6 grand. Hadn't been for that, you know, my cost average would have been up closer to 11.5 or 12 grand. And I'd be sitting really pretty right now because even if this goes up, I could get back in for where I sold. As it stands right now, if it does go up, I'll have to buy it back. Well, I won't have to, but I will buy it back, what I sold. Let me put it this way. I'll buy back what I sold pretty much regardless, right? I'm either going to get it back cheaper or I'm going to pay more when I buy it back. And that's just trading. That's basically what will be a losing position trade if it goes up, okay? I see a lot. That's something else I want to address in today's video. I see a lot of people acting like, I'm gonna call somebody out. I have no personal problem with this person. I don't know anything about this person. I don't know whether their calls are good. I don't know whether their calls are bad. It's what they said that I have a problem with, okay? Because it's the attitude that a lot of people have, and it's a ridiculous attitude to have. Here it is. Don't fight a once-in-a-millennium, civilization-changing phenomenon to try to snag a potential 8% off a local short. Don't fight the trend, submit to it, embrace it. Okay. You're not fighting a life-changing phenomenon. You're not fighting a civilization-changing phenomenon. If you are wrong, if you are short right now and you are wrong, you can still buy Bitcoin back. You just have to pay a little more for it, okay? I'm not sure why people do that, but that's one thing that got me in all kinds of trouble. So make sure your mindset is right. What got me in trouble all through here was thinking that if I sold my Bitcoin, that if I was wrong, I would lose out on hundreds of thousands of dollars or millions of dollars. That's what got me into trouble. Thinking, man, if I sell and I'm wrong and it keeps going up, I'm screwed. It's also the same conversation I had with my wife right here. In December 2017, I told my wife, honey, if I cash out right now, we can pay our house off with cash and have money left over. But if I'm wrong and it keeps going up, we could miss out on millions of dollars. That is textbook FOMO. That's the stupidest thing ever. Had I cashed out right here at 19,000 or 20,000 where I was talking about it, actually in all fairness, I was talking about it about 17,000. Had I cashed out at 17,000 and it kept going up, I could have just bought it right back for a little more money, right? Or if I cashed out up here at the top, if I knew then what I know now, which is that CME futures was a buy the rumor, sell the news event, right? If I cashed out at the top and when I was wrong, I could have just bought back up here, right? Same thing over here. If you're going short, or if you went short, you know, like I went short again, my cost average was 8,800, so I'm short way down here. If I'm wrong and this goes up, it doesn't mean that I'm rejected from ever owning Bitcoin again. It doesn't mean that I can never buy Bitcoin back. It just means I have to pay more for it. That's all it means, right? It's not that big of a deal. You know, look, I'm just going to be very blunt. If it's a big deal, it probably means you're playing with money that you shouldn't be playing with, right? If you have, let's just use a nice round number. If you have $1,000 worth of Bitcoin, right? I'm just using it as a round number. I'm not saying that's what anybody has. If you have $1,000 worth of Bitcoin that you sold at 9 grand and you're wrong on your trade and it goes up to, let's just say it goes up to 12,500 and you decide at that point that you're now a bull and you decide to buy that back, that's a difference of about $3,000 or $4,500. What did I say? 9,000? I think I said 9,000. So if you went short at 9,000, you buy back at 12,500. That's a difference of 3,500. If you sold, or not even $1,000, let's say 0.1 Bitcoin. So if you sold 0.1 Bitcoin down here and you buy back 0.1 Bitcoin up here, you're going to pay an additional 350 bucks. It's not a life-changing opportunity that you're fighting. It's not a civilization-changing phenomenon you're fighting. It's 350 freaking bucks, right? If you have a whole Bitcoin, it's going to cost you 3,500 bucks. If you have 2 Bitcoin, it's going to cost you 7,000 bucks, right? It's not chump change, but it's not life-changing opportunity that you're fighting. You're risking US dollars, or you're risking, pounds, or you're risking euros, or you're risking whatever fiat currency you're trading in. It's ridiculous to try to make people, that's what stresses people out, and that's what freaks people out, and that's what creates FOMO, is telling people that if they're wrong, they're never going to own Bitcoin, and it's going to go up without them, and it's going to the moon, and they're going to be so sorry. It's bullshit. Just buy the damn Bitcoin back, right? If you can't afford to buy it back higher, then consider not selling it all. Consider being a hodler, right? If selling Bitcoin at $9,000 means if you're wrong, you can't afford to buy it back, perhaps you shouldn't be selling your Bitcoin. Or maybe just buy back a little less Bitcoin. If you sold down here and you got $1,000 and it goes up, buy back as much as you can with $1,000 perhaps. That's a strategy that you could try, right? What you're not doing is risking your life. What you're not doing is risking a life-changing opportunity. You're risking a few dollars. That's it. Okay? Whether it's an altcoin, whether it's Bitcoin, whether it's a stock, whether it's gold, silver. That's it, right? Don't think about it like a do or die, black and white situation where you're either right or you're wrong, right? And if you're wrong, you lose everything, and if you're right, you get rich. If you think about it like that, you're going to freak yourself out. That's not what this is, okay? Right now, if I look at my trading, my position trades, I went short on Litecoin up around 127. Okay, I went short on Bitcoin at a cost average of right around 8,800. So right now, if I buy back all of my Bitcoin, okay, if I buy back all of my Bitcoin right now, if I just say, you know what, I don't care, I was wrong, I buy it all back, I'm going to pay about, 15% more than I sold it for, somewhere in that ballpark, right? We can actually look. So if I sold it around 8,800, if I buy it back right now, we'll just call it 17%. Okay, so I would have a 17% losing trade, and that would certainly suck. 17% on a trade that large would be a significant portion of my portfolio. Now, I went short on Litecoin at a cost average of around 127. Same deal. I followed a stupid rule. I sold some of it $100. Most of it I actually sold up around 140 bucks, but because I sold some at 100, my cost average came down to 127. Okay, so if I buy back all of my Litecoin right now, I'm going to make about 71.5%. Now, those trades were the same size trade. Okay, Litecoin was just over 30% of my portfolio. Bitcoin was just over 30% of my portfolio. So guess what? Yep, I would lose 17% right here, but make 71.8% over here. This right here, by the way, is why I don't hodl, okay? Because even though I was wrong on one, I was right on one, okay? And by the way, I don't think I was wrong. I still think I'm right. I still think this is going down. I think when this is all said and done, I'll end up getting my Litecoin back for around 40 bucks, and that's going to end up being, if so, that's going to end up being about a 216% trade return on a third of my portfolio. And I think I'm going to end up getting Bitcoin back. Worst case scenario, I'm thinking 7,200. and that's going to end up being about a 21% gain on a 30% portion of my portfolio. So those two trades are going to more than double my total portfolio if I'm right. If I'm wrong, I'm still going to come out ahead, because if I'm wrong on Bitcoin, I was right on Litecoin. It's that simple. I didn't risk a life-changing opportunity. All right, I don't want to beat a dead horse, but I want you to get that in your brain, because that one single thought process will damage you. That one single way of looking at things, of thinking that it's do or die, will make you FOMO. It will make you do stupid, stupid things. All right? With all that being said, please remember, I am literally some guy sitting in a spare bedroom. I am not a professional financial advisor. I'm not your financial advisor. Nothing in this video is financial advice. And you should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. Don't forget, you can check the description for links where you can follow me on Twitter, TradingView, and also where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.